Are two big bank CEOs right in telling us not to worry about lots of interest rate rises? Bond yields are falling. Is this a good thing? And do you have the guts to zoom into tech stocks? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, Jamie Dimon, the boss of JP Morgan, arguably one of the biggest investment banks in the world, he kind of hosed down interest rate fears. They're going up, but not by as much as some of the doomsday merchants are predicting. He said in a conference this week in New York. And then the CEO that you mentored many years ago, Matt Common at CBA, he also says don't worry about too many interest rate rises. Are they right?
Well, I think they probably are going to be right, Peter, because the market is priced in so much action and negativity by central banks. But central bank action continues. Looks like the Reserve Bank in New Zealand. We just look across the
the Dutch, to pronounce it properly.
Yeah, the Dutch. They look like they're going to increase their cash rates up to 2%. So they're pretty keen about action over there.
Yeah.
Our central
and
bank
they've been aggressive from the outset.
They have been aggressive from the outset. So those Kiwis, they really know how.
They're very aggressive. They're very aggressive. You see it when
it.
they play football. They play football aggressively.
But look, come back to what both Jamie Dimon and Matt Common said. Market's pricing a lot of bad news, a lot of action by central banks.
Yeah.
I think they're both saying, look, it's going up, but look, it's not maybe as needs to be as aggressive, and perhaps the market's fearing the worst, as markets tend to do.
Yeah, I like Dimon's comparison. He said, what I think we're looking at now is really dark storm clouds, and storm clouds can dissipate. He said 2008 was a tsunami. You don't escape a tsunami. It takes everything out. And I think that's a really important comparison because, you know, the recession and the stagflation talk, it's all speculation, Paul. And sure, if inflation doesn't go away and the power of unions to raise wages and the power of price makers to raise prices, that would create a wage price spiral and stagflation. I don't think that's there anymore. The internet has made all businesses worry about what's going on overseas. And I think even wage earners in Australia need to worry about what goes on in the Philippines and Bangladesh and Asia. These are alternatives for them if they all want to work from home.
Yeah, and that's of course sort of the thing we've been talking about. If you've been a regular watcher of Mad About Money, about digitisation and the enormous, one of the reasons why inflation couldn't go up because the power of and what's happening in technology and companies having to respond to the challenges from rivals and new labour markets and new processes through what is sort of the tech revolution has caused a really drag on prices. Now, how that plays out, we don't know. This week, important data in the US with their monthly, or I think their quarterly PCE figure, which is their preferred measure of inflation. We'll see how that plays out. But market's on alert still. But I think I think those two CEOs could yet prove to know more about the economy than a lot of the so-called market experts.
Yeah, and let's face it, like Matt that wouldn't do it by himself. His economics team also had the same view. And they are the biggest lender in the country.
Well, they're one of the best data sources in Australia, Peter, because they have so many customers and they're one of the biggest lenders.
Yeah,
so.
and if you worry about recession, they also know that a lot of their customers have enormous buffers built in their home loans because people have been overpaying their loans as interest rates fell. So it can be very interesting to see how this plays out. I hope Matt and Jamie are absolutely right. Let's go to bond yields now, Paul, and you're an old bond market player. They're falling now.
Well, they're certainly not going up, Peter. They went up so quickly in the US from 2% to 3%. Now we're down about 2.8, maybe a little bit lower. And there's sort of they went up almost 1% in the space of a month. That was a huge movement in terms of the so-called benchmark government bonds. That is the 10-year US Treasury bond. Everything else follows off it, Peter. So you just watch that one and you know what's going to happen here, essentially in Australia. Yeah. And so we're getting a bit of a turnaround as people start to see a little bit of value. And also the question mark is, well, the bond market is so far again ahead of where the central banks are. Has the bond market priced in too much action? And then as people are now talking about that, they're next taking it to the next level and saying, well, hang on, if the central banks start to raise interest rates aggressively, what does that do? It means that consumers start to defer purchases, and that causes the economy to slow, and if we're
Yeah.
not careful, we might end up in a
Recession.
recession, which then means bond yields come down again
Yeah.
because inflation falls.
And
you
then
get the
tech
loss.
stocks will go up.
So that's what you're starting to see. So
Yeah.
I think there's a bit of value in the local market. You know, your bonds over 3%, you can get a term deposit now for 1 year for 3.1%. So
Yeah.
there's a bit of value out there. I think there's some money going to flow into that, and I think that's what we're starting to see.
Yeah.
We're seeing bottoming, a little bit of bottoming in the bond market.
Yeah, the good sign would be if the bond market said we've overreacted, we don't think there's going to be as many interest rate rises as we were thinking. But it's a bad sign if it's a precursor to a recession. So that's the way we'll be watching the bond market.
Yeah, and look, this is all still about inflation. So if you think inflation's got further to go, bond markets probably go up. If you think inflation maybe we've overreacted a little bit, then that's what the bond market is perhaps telling us. I think.
And Shane Oliver's inflation pipeline indicator is actually showing that inflation is starting to peak, which I hope is actually a reliable indicator. Let's go to the final one, Paul. And I've got the question, do you have the guts to zoom into tech stocks? And the reason why I said that, of course, is that Zoom reported this week. Now, I've always said if you're going to buy tech stocks for the future, and they're not going to bounce back anytime soon in a big way, but if you're going to buy them, you buy companies that are businesses of the future. And Zoom has become a business that grew in the coronavirus lockdown, but everyone's using Zoom. Now a lot of employees who want to work from home, and a lot do want to work from home. A lot of people are saying no to new jobs if they can't work from home. And so Zoom's going to be, and Microsoft Teams, both those products are businesses of the future. And Zoom reported better than expected, meaning that the tech stock sell-off for Zoom was over the top, and all of a sudden it's, oh gee, we got it wrong. This company's actually doing well. Well, duh, Paul.
Yeah, look, a gutsy call given again what the lead we've got from last night from the States. I mean, they're still punishing tech stocks. A big move down in things like Meta, which is your Facebook, down 7%. Tesla was down 5%.
Yeah.
All on the back of Snap and all the rest of the stuff, down 40%.
Yeah.
So having a look at some data today, Peter, I mean, Meta down 46%.
This is Facebook, in case you forgot. Yeah.
Since the start of the year. And that's not going back a year, that's since the start of the year. Here's a company for you, out of Atlassian, of course, Mike Cannon Brooks. Yeah. Now trading the shares are about 160. It got to about $460, right?
Looks like enormous value.
It's down almost 60% year to date. Yeah. So there's been hugely punishing moves at some of these tech stocks, and at some stage, they're a screaming buy. It has the market bottom. Well, after last night's movement, you couldn't say it did. They're still ready to punish, but there's going to be some good value in some of these tech stocks. And as we know, just the market takes it up too far, it brings it down too far.
Exactly
so
right.
The question is finding that turning point. I thought we started to see a little bit in the Australian market with Xero and a couple of others, but the lead last night is going to be still make it pretty tough. So it's a gutsy call. Yeah. But you have to buy when others don't want it, and you've got to be prepared to wear some pain.
Precisely. And that's what Buffett said. You need to be greedy when others are fearful. But he would emphasise you do it with quality company with really good management. And companies like Xero and Atlassian, they are good quality companies.
Well, they have real businesses.
Yeah, they have real businesses.
They actually do.
Yeah, it actually works. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
Shh.